We've got a crucial week ahead with the US non-farm payroll and central bank monetary policy dominating the week's calendar and investors' attention who are looking for clues regarding the timing of start of tapering. So let's start with the US economy. Tomorrow, we've got two big ticket items, the prelude to Friday's non-farm payroll and the advanced second quarter GDP releases. The ADP non-farm employment change figure is often seen as a lead indicator of which direction headline NFP is expected to go. Expectations call for a marginal fall from 188,000 to 181,000. However, given the recent disparity between the figures, it's worth treating the ADP figure separately. When it comes to the advanced GDP releases for the second quarter of 2013, expectations call for a slowdown to -1% from a downwards revised figure of 1.8%, which would provide evidence that the US economy will struggle to grow without the artificial boost of the current asset purchase scheme. What is interesting about this figure is that if we look back, it has a tendency to disappoint. So should that be the case, we could expect a certain impact upon asset market continuation. Later on Wednesday, all eyes will be on the release of the Fed's monthly interest rate decision. Although not much change is expected here, the markets will be looking for any change in the current outlook from Bernanke. On Friday comes the headline event of the week in the form of the non-farm payroll report. The release is expected to come in lower at 184,000 from 195,000 last month. Bernanke has described last month's strong release as not overly representative of the current employment outlook in the US, so the markets will be looking to see if the current uptrend can continue. Considering the view that strong employment figures could bring the tapering of QE forward, any strong deviation from market forecast is likely to bring in increased volatility. A quiet beginning to the week for the UK economy brings the focus towards the end of the week, and more specifically on Thursday, when the Bank of England Monetary Policy Committee are set to release their latest monetary policy decision regarding interest rate and asset purchase. Considering the 9-0 vote against asset purchase, we do not expect much change here, but it will be interesting to watch the accompanying statement. Last month, the Bank of England surprised the markets by following in the footsteps of the ECB with a vague form of forward guidance. An official assessment will be provided alongside with the inflation report on August the 7th. This is a relatively quiet week for the Eurozone, considering the excitement from the US and the UK economy, with the most important event coming on Thursday in the form of the ECB rate decision. No change is expected here, and the interest is likely to be upon Draghi's post-announcement speech, where he will have the opportunity to devalue the euro. Recent discussion about negative interest rates have previously affected the markets, so be prepared for comments that could provide shocks and spark volatility. Enjoy your trading.